Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 201 for October 29th, 2018. We are broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also now listen to the audio-only podcast version of every episode on iTunes, Stitcher, Spotify, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. But if you're watching the video, you should see the PDF version of the report for this week on your screen right now. You can also go to TimingResearch.com/reports to find this or any past report there. I have Michael Filighera back to moderate today. I'm going to go ahead and turn it over to him.
Good afternoon, everybody who's on the Central and East Coast, and good morning to those of us still out on the West Coast. I hope everyone is having a great day trading today. Certainly the volatility is continuing. Joining me today is Jim Kenney and Damon. And Damon, just help me out, Pavlatos?
Correct. Very good.
Hoping I say that correctly. Great. Roy Swanson, who was due to be with us today, had a family emergency, so he's unable to join us, but I do have his direction, and when we get to that question, I'll add that in for us today. Let's just start with a quick round of who we are and where we are, and we're going to start with Damon, and then
you cut out a little bit. Am I speaking first?
We're starting with you.
Okay. Yeah, so my name's Damon Pavlatos. I'm the CEO partner of FuturePath and Photon Trader. Basically, I started in 1977. Tomorrow's my birthday, 62 years old. And I've done just about everything through my career. I owned 4 different seats. I was on the Mercantile Exchange for 28 years and then started a brokerage and electronic trading platform, which is FuturePath and Photon Trader. And when everything started going electronic, and it was like back in 2001 and 2. And that's pretty much, what I've been doing since. I definitely am a technician. I married Linda Rashke, and she was a client for a long time, and we were both technicians, and full disclosure. And I'm here today with you guys, and we'll talk about the markets, and hopefully I can shed a little light. There's never any guarantees, but I'll try to give you my flavor of the week.
Great, thank you. And Jim?
Yeah, I provide the content over at optionprofessor.com. It's a firm that has educational DVDs, and we've been doing this for decades and basically try to give people a understanding of the uses and risks of the options for hedging purposes, income purposes, as well as limited risk speculation and all the different strategies that are out there. And we also have a podcast every week, weekly update on the markets. And so at the end of the broadcast, we'll explain how you guys can get access to the link so you can check out the weekly update on the podcast.
And thank you very much. And again, I'm Michael Filighera. I am the sole proprietor with logicalsignals.com, which is still basically, I'm still revamping and getting it together as to how I want to use it. In the meantime, I am working together with one of my past
Hello.
I have been, and I've traded here on the Pacific, which, by the way, Damon, I traded with your wife.
Oh, there you go.
Small world, right? I've traded here on the Pacific. I've traded in London on the London traded options market. I've traded in Amsterdam on the European Options Exchange. And then I've also, my introduction into electronic trading was via the DTB, which is the German Bourse. And then I came back to the United States, and ever since I've kind of just switched over to day trading. I'm trading options. I still do trade options, but my main focus is trading futures now. And so I'm hoping that today's really going to be a great show. because we have an options professor, and we also have a couple of futures traders, so this should get interesting. So let's kind of dive right into it this morning. And our first question is, which direction do you think the S&P 500 index will move from this coming Monday's open to Friday's close, so that's October 29th to November 2nd? And right in that, we're also going to include in that to rate your confidence in that answer by giving a probability percentage. And again, we'll start with Damon.
Okay, we're jumping right into it. Okay, let's see. Let me throw up a couple things here for you to look at.
Sure.
You know, for one, this is a tough week to call anything, let's face it, because in the middle of the week, we enter a new month. So if you look at a monthly chart, you know, I kind of feel, I'll show a couple different charts. I kind of feel that we will be higher towards the end of the month and then going into Friday. So I feel like we will be up towards the end of this week. Now, there's reasons for it, and I'll show a couple more charts. And what you're looking at here, but if you look at the monthly chart, this is very indicative of what we did back in between 2014 and 16. We had some major volatility after a big run up. And, you know, this is certainly a different administration and facts and things and, you know, different economy. But I do feel that the charts are showing that we may be in for some kind of consolidation up here. Now, with that being said, there's just so many factors fundamentally that can affect it. So you can, you know, this is looking at charts in general. If you look at the dailies, the weeklies, and the monthlies, you know, my support is, see here we had buy divergence here, you know, lower lows here, higher lows on the oscillator. And this here, to me, you know, the very bottom. Can you see my cursor? All right, I'm not sure. Can you see the cursor?
Yeah. Yes.
So that's a major spike, a major rejection, just like this was here. And then we got a nice pullback. I'm longer term, I'm a little bit, not a little, pretty bearish for, you know, some kind of a turnaround. But this month is really important to me. If we were to, on the 1st or in November, take out the month low of October, then I have on my stuff a major reversal. I use a 3-bar reversal, which I'll show you a little bit later. But that's the short of it, and I'll show you some more charts. I don't want to cut into anybody else's time. You go ahead.
So you're, for this, the balance of this week, you're saying lower?
Higher.
Higher.
Yeah.
And what percentage probability are you giving that?
Well, you know, it's very hard to put your butt on the line, and of course, it's just my opinion, right?
Yes.
I'm going to have to say, I feel about a 70%, you know, confidence level that I think, you know, you'll see will be up in the week.
Mm-hmm. Okay. And Jim.
Yeah, I agree with Damon. It does look like there's a chance for it to go up by the end of the week, despite the activities today. A couple of things that could obviously turn it around is some of the FANG ones, Netflix and Amazon, are getting a little bit oversold here. You know, when Amazon was up at 2050, I told people that, you know, Amazon has half the revenue of Walmart and 3 times the market cap. And it's trading about $500 above its 200-day average. I said, I don't know how many tea leaves you need to read to figure out the odds are shifting here, but to me, hedging up there and doing tactics to protect your equity made a lot of sense, and I suggested that as that. Now, obviously, that was very correct because we're way down now. So on the reverse, you know, this is a company that obviously has gotten whacked very hard as they took all the excess off the table. And they're both, Netflix and Amazon, about 20% underneath their 50-day moving averages. So they're getting a little oversold going into the end of the month. And you could get some bargain hunting at the end of the month. Plus, we will be getting Apple's earnings on Thursday. And if they, you know, knock the cover off the ball or get people thinking more happy, you know, then obviously some of the short covering could occur, and maybe a little bargain hunting, as you like Damon was saying, at month's end to kind of paint the monthly statement a little bit prettier than it looks right now. So I think it has a shot of going up. I wouldn't bang the table on it, but I would say that it's better than 50-50.
Right, Michael, are you there? Right, looks like.
I am
Oh,
here.
you back?
I am.
Okay.
Here. Yeah.
Okay.
Oh, that's going to drive me crazy. Well, I'm doing everything that David told me to do so I don't cut out. So if you don't hear me, jump in, because that means that something happened. Any case, I am going to be the lone holdout here, and I am going to say lower. And I've only rated this about a 65% probability because I tend to agree with what Damon and Jim have presented in terms of we have end of the month. There's usually can be some window dressing there, and so we may not see that until Wednesday. But I'm hedging that against the fact that I saw the selling that I saw this morning, and when it came in, kind of told me that maybe some of the what I label as status quo buyers, which means at the same time every day they've come in with the same type of a move and tried to push the market higher, continue. But today I saw them come in as sellers and large sellers and just drive the market lower and continue to drive it lower. And they continue to come in and now just help out the earlier sellers and are pushing this market lower. If that lasts for the week, then I'm going to stand and look good. If they don't, then I think we still have a chance. I don't believe it's going to be a strong rally, I'll tell you that. But we may end up higher than where we started the week. And so I'm giving mine about a 65% chance, like I said. And so we're going to hang out with that and just see how that all turns out. The reasons that people had are kind of interesting, but I think people they kind of are tired of what they are seeing. So it just seems that, well, we had so much downside, we're going to have upside now and things of that nature. And I think it's much deeper than that. I think that we have a very strong possibility that a much larger correction is at hand here. And while people want to hang it on the October doldrums or the October hang, however they say, may not come through. Even though some of those higher respondents came through and said that the market is very oversold and needs to rebound. We've had some good earnings. I think they need to kind of pay attention to the fact it's like, what just happened in Amazon? They didn't blow the doors off, but they weren't bad. They kind of started to hit it, and now they're hitting it even harder. So I'm seeing that some of that fluff is what I call it. Over-evaluation, I think, is how Jim said. I think that it kind of just continues for people getting out, and that, of course, is going to push things lower. Because on top of all that, what we still have hanging over the market is the fact that interest rates are heading higher. Now, so going back around, I think you kind of filled it in, but let's give both you guys a chance too. Is like, for your answer to question number one, are there specific reasons that you think the S&P will be heading in the direction? And I know that both you, Damon, and Jim, you started it, but is there anything you want to add on that? And we'll kind of go.
We also wanted to mention that Roy said he was lower for the week, even though he wouldn't be able to join us.
But you beat me to the punch because I was just going to add that. But thank you.
Oh, okay.
Thank you. No problem. And so, Damon, more specificity on why you believe that we may end up higher on the week.
Okay. Being that I'm purely more of a technician, don't get me wrong. I believe that the market is in trouble and we could have a big correction as we move forward. But we're talking this week. So, oh, by the way, I put this for disclosure just because we're in this business and I'm sure you've read plenty of them. I have to put that up. So the fact that, we had some major spikes to the low downside and some heavy volume and a climax, a double climax. But I have buy divergencies on my dailies. And the fact that everybody I talk to is bearish makes me bullish when you combine the whole thing. You know, I saw a lot, you know, when you get a call from, you know, friends and relatives that don't trade and say, should I get out of my stock? That's a good time for a short-term bounce. But, but let's just look at a couple things, if you don't mind. And it's easier for me to show you what I'm talking about.
Sure.
But let's just take today, right? Can you see this chart?
Yes.
So this is a photon trader chart. This is our software, and basically you're just looking at a 5-minute. The wider the candle, the more volume, and each bar is a 5-minute. This is what you were talking about, Mike. You know, you get this like, oh, we're going to bounce, right? That's at night. You get this nice rally. This is the opening. You get the initial push, we're going to bounce, and then when there's no more buying, it works its way down. But this is typical. If you were to look at here, let's just do this for a second. Okay, we'll use this. All we did is come down into these little, what I call pockets, and look at these spikes into them, saying, I don't want to spend too much time down there. This is just today. Okay. Let me just see if I can bring up a couple other quick ones for my reasoning anyway. Okay. Well, let me just see if this is also today, and you could see that the market did push down lower, and I'm using Window Trader, which we're doing a joint venture together with Photon Trader, and volume is really important as far as I'm concerned. It's the only real-time indicator, but this is showing, you know, a push down here. In the morning, we actually went lower. Oh, I'm sorry. For some reason, it didn't show this chart. Let me just see. Okay, how come it's not switching here?
I do see your the volume chart.
No, but oh, there it is. All right, you see that? Okay.
Yeah.
Sitting here talking to myself. So for the most part, you know, I watch volume and how it reacts. And, you know, I'm watching this morning and watching, this is before we actually tested down there. And you can see the tails from before, you know. When we see a tail like that, you know, usually it's retail selling. It's not. It's leads me to believe that the institution's lightened up and, you know, might come in later, you know, during the week or next week. But I do feel, looking at the dailies, we could see a bounce. We've had quite a bit of a sell-off, and we have now buy divergences. And that's, you know, part of the reasons why, like if you look at this one, see that it changed?
Yes.
There's a delay on mine too. Anyway, let me see 1 second, and then I'll definitely give it back to you. I don't want to hog it, but
okay. So you're going to put up a chart, or you want me to move on with Jim?
All right, go ahead. You can move on because it looks like for some reason.
If I see your chart, then I'll come back.
All right.
Jim.
Yeah, just like I said, it's getting a little bit oversold technically. So obviously that's not a tremendous reason that it might bounce, but it is a reason. The volatility expectation from the Apple earnings on Thursday is plus or minus 6%.
Wow.
So that's obviously something. And, you know, Apple generally does pretty well because as we go around the world, everyone's got their device in their hand, right? So, you know, that's another thing going on right now. And then the jobs report on Friday, that has something that could make the markets react. And I'm looking at the VIX, which last week went up towards 28, I guess, and then this week it's fading into 23.42. So as long as it's above 20, you still run that risk of blowing out the lows and going into the abyss a bit, because above 20, the VIX is dangerous as far as bursting to the upside. And so I obviously very disappointed the market could not hold June and July's lows, which is around the 2690 area. So the fact that it has not been able to hold those lows, and as it gets above it, it gives it right back underneath it. So, if we take out 2628 last week's lows, then the quarter number one's lows between 2530 and 2590 come into play. And that, I think, would be the next zone where the market could stabilize if it breaks 2628, which was last week's low. So, that's why I put the chances on it at a little better than 50-50, because of, again, I'd expect Apple might have some good earnings that could be helpful to the market. And they are selling off pretty heavily here. And the month-end statement could get some window dressing to try to bounce the market so the statements for October don't look that messy. And, the jobs report on Friday could be something that could underpin the market as well. So, with all that going on, it wouldn't surprise me to see a bounce to the upside. But overall, this market is very disappointing as it stays underneath the June and July lows, which was the 2690 area. And again, at some point, it may go into those Q1 lows of 2530 to 2590 before all is said and done.
Okay. Jim, may I ask a question? Where do you have the 200-day? Because I've always really have listened very intently when you start talking about that 200-day moving average, because I know that that's
which market are you looking at? The S&P 200-day?
Yeah, the S&P 500.
Yeah, well, the S&P 200-day has gone. Now I'm looking at the lows on a monthly basis going out back through the year. So June, July's lows was around 2690 area. So that's why it had bounced out of there very nicely, but then it came down and took it out, which tells you that there's some real weakness going on. Right. And then basically, again, so the 200-day moving average is really not that important right now as far as support, because obviously it's above the market. And currently that's coming in at 2767. So if you wanted to really get back on the bull train, it wouldn't kill you to wait to see if it closes above 2770 before you get too excited about that. The worst is behind us. And again, we're not tremendously oversold underneath it, so there's not, the 200-day right now is not much of a factor. When we're up at 2950 and the 200 days down in the 2700s, then again that's a factor, because then you're pretty far away from it, and that's again one of the reasons why it'll gravitate back to the mean. Right. But again, as far as this week is concerned, the VIX is indicating that we might see a little bit of a rally because it's fading a bit. Again, the Apple thing on Thursday is something that could be constructive. Selling off early in the week, like we're doing with Amazon and Netflix, could be constructive later in the week, and the jobs report on Friday. So again, the overall traffic in the market looks lousy, but sometimes before lousy, it turns around.
Very, very well stated. Thank you very much for that.
And where's the RSI? Anybody know where the RSI is? Because I'm sure the RSI is in the toilet as well.
I don't know, Damon. Is that an RSI in the bottom of this chart?
No, it's a rate of change to.
Okay. Change, yeah. I'm not sure where the RSI is, but I'm sure that it's probably, as you just stated, down in the toilet as well. But it could turn, obviously, if we get strong enough buying coming in, that's going to go right with it. I do not disagree with what either panelist has said this morning, but the way I'm viewing this is I am an Elliott wave analyst as well, and I think that what we're really heading into is what I would term as the point of recognition. And if we hit that midweek, then I think all bets are off, and we will be going lower, and we'll probably go much lower. So I think a lot's going to depend on where that actually falls into place and hits the market. And what I mean by point of recognition, that's a point where people are, retail and institutional traders are going to realize, oh, we are headed lower. We recover from here. We're headed out, and then everybody starts piling in because everybody wants to change positions and be better prepared. Now,
yeah, an Apple missing a bad jobs report would pretty much take the air out of my balloon pretty fast.
yeah, very well said. But I do agree with what you are saying, that in front of that, we do have some possibilities that we should get some larger bullish news. And if Apple comes out and blows the doors off of earnings yet again, then I don't care. We're going higher because Apple is a part of every index, including the S&P. And when it makes large enough moves, it'll carry the weight and pull it all up. So I think that you're right. Those Apple earnings are going to be critical to direction, at least for the balance of this week and very, very short term. So how the market reacts to those earnings, I think, could also be just as big of a clue. And by what I mean by that is if Apple reports their earnings and they're not bad, in fact, they may be good, but maybe some of the guidance is kind of like, well, we're going to take some of the froth off of here or whatever. That could really flip things around, as what happened with Amazon. Amazon's earnings were not bad. In advance of those earnings, they pushed up Amazon over $100, and then they came out and the stock was down 130 right off the bat. So again, I'm going to sit with my respected other players here and say, yeah, I still see down, but a lot's going to hinge on Apple's earnings. For right now, it's going to be all about Apple.
So let me just, you guys see this chart now?
Yes. Yes.
I'm just throwing I have way too many charts, Joe, so I'm not going to get into it. But okay, so we had this incredible break. We're talking about this week. If you were to say, what do you think is going to happen by December, that's a whole different story. And plus, there's a lot more variables. The reason why I'm looking at this week is just that I've been, I being in the markets for so long, and I see this kind of thing, and I see the divergences, and I see this consolidation back here with all these lows, that the markets for sure has been in kind of a panic mode, which usually is a short-term bottom, and I think it already had its double dip right here. And even looking at today's action, it's not really, it's holding like yesterday's consolidation, last night's and Friday's. Not to say it can't go lower today and tomorrow, let it be. But it is extremely negative for me if on Thursday we take out, or Friday we happen to take out the October monthly low, then I am in a long-term downtrend myself. I'm not going to call that until I actually see that reversal on the monthly.
And would you remind us where that low is?
Sure. Let me just take a look here. I don't have everything right here where I can look at it, and we're not far away though. Let me just see. I'll have to. I don't have my other charts available right now. Hang on one second.
Are you asking about the low on the S&P, Michael?
Yeah, look at the monthly low on the.
It'd be 26.28. Yeah.
26.28. Oh, that's what you mentioned before. Okay. So we're still about roughly 45 to $50 above that.
Correct.
And
for me, for a longer term play, if we were to break that, then I think we got a bit of a sell-off coming.
And if indeed we're going to drop into that, what you could call the donut hole, you could call it the point of recognition, that low will be broken and left in the dust. That's the power of this particular move, should it occur. And that break comes at 26.28. And whatever that low is, the equivalent low in the NASDAQ and the equivalent low in the Dow and the equivalent low in the Russell. So when you get all three doing it, that's a big point of recognition, and everyone's bailing. And if that doesn't happen, there's hope. If it does happen, I think it's going to be on the backs of what we've all been talking about. the fact that Apple's earnings didn't blow the doors off, the market doesn't like them, maybe they put out some slightly negative guidance moving forward. We don't know. This is all to be done. But I think that what really is going to help every last trader out there is being prepared. So you're not moving into the market in a panic. You're just going to move in and protect yourself and maybe, and trade it and trade what's going on. I want to kind of move on to our question number 4. And then when we're done, we'll kind of do a quick runaround to see if anybody has a trade suggestion or just wants to talk about a trade. So question number 4 is, have you ever or do you currently use any type of auto trading execution with your trading strategies? I'm going to start with you, Damon, on this question.
Sure. So, that's something for another trader, not for me so much, because number one, when you do an auto execution, I still believe there's got to be a little bit of an override in that. I wrote my system was really pretty good, and I did some back testing and it made money, and I'm not going to get into that. But the problem was that it's hard to write a system that says do not trade like when the unemployment figure is coming out, or don't trade if the Fed is going to come out and make a surprise announcement. I mean, and those are the kind of things that I would steer away from personally. So but I do feel like there's some good systems traders out there. It's not for me. I do like, I feel that after 1987, and we started to trade globally, if you can't be up 24 hours, and the market does have a lot going on that in the middle of the night you can't control, that I personally feel day trading is, for me, the best way to go. And I like being hands-on and watching the markets as it's forming and looking at volume and all that stuff. Now, doesn't mean that there isn't some good auto traders out there. It's just not for me.
Okay. And Jim?
In a word, no. And that's about all I have to say on the subject. So take it from there.
Because I think I can fill in the blank. Most of the answers actually that came back from respondents was no. Just in a word, no. So I think that's really great. I actually do use an auto trader, but it's an auto trader that I had written specifically for my own strategies. And the one that works most effectively, and particularly in the futures market. So that's the other area that I think I need to make clear. These are not for individual stocks, although they will function if you're just trading, for example, Apple or Google or one of the other stocks in the many that trade. But it is more set up for trend trading. I think that when you use an auto trader, you also have to have the ability to program in how you specifically want it to trade in a particular time. Where do you want to put a stop in? How do you want to use that stop? And that gets a little bit tricky. So I would not use an auto trader that didn't allow me to program in how I want it to trade in this particular time or today. So with my own auto trader, I have it set up where I can put the time in that I want it to trade between these two times. And then, for example, in crude oil, if I'm going to trade crude oil, we all know on Wednesdays, for the most, unless there's a holiday, we get the EIA number. I don't want to be in there trading on it with an auto trader because it'll get whipped all around. So you can set it specifically to not trade in particular times and to be flat. I also use an ATR as my trail indicator. And so with that, I can also then program in to use that, and then I'm following the move. And when that changes from one side to the next, either buy to sell or sell to buy, it reverses my position. That can work with you, it can work against you, because there are times when the market can get a little choppy that you don't want to be actually trading with that. But again, in a trending market, which we have had, I have been using it, and I actually been using it in the S&P, which tends not to get as whippy as the NASDAQ or even the Dow. Takes more stocks to actually move it, so it does move a little bit more, or move more clearly, let's say. And then also within that, I can also program in that I want to be, say I'm going to trade 2 contracts. I'm going to take the first contract off after an 8-tick move. And then I'm going to hold the second one in case, this thing just goes into a continuation type trade. And then that stop is then going to roll down with the market move, or roll up with the market move. So I don't think that auto traders are inherently bad, but I think there's many out there that will not protect you, that don't trade well. So I think that when you're really looking for one that you might want to use to get in and out of markets, that it's best to kind of really get one that's going to be able to be programmed to how you want to program it, so how you want to trade. Now what I'd like to do is to just kind of do a round robin between the 3 of us. And again, we'll start with you, Damon, on any trade ideas that you may have coming up in advance of Apple's earnings coming this week. And I believe, where do they come on Thursday, I believe. So something that might be revolving around Apple or any other stock or any other index that you kind of trade and follow. Damon.
Yeah, so when it comes to stocks, I don't really trade stocks that much. I haven't in a while. I look at them, but some of these stocks have already had an extended sell-off. So I believe Nvidia, for instance, is down to the 21-day moving average.
Mm-hmm.
And it's lost quite a bit, and same with when you have $150. Sell off right on the opening with Amazon. That's you had a really capitulation in there. It doesn't mean we can't go lower, but those could be trying to hold a little bit. So I don't look at the earnings too much, because that's a guessing game for me, and it's a roulette.
Mm-hmm.
This week is going to be a touchy week to call a trade, because the middle of the week is the end of the month, 31st, right, on Wednesday.
Yes.
It said if the market, cannot come out of it, then the reverse is going to be very ugly, to the downside if it takes out last month's low. So I would be sitting neutral this week, to be honest. I don't want to give any kind of recommendation, because there's too many variables. And of course, there is also to get too married to any position in the market. Mm-hmm. With the elections coming out, I think that's the bigger unknown. What they're going to do and how it's going to.
I agree with you on that. But let me ask you. I think I agree with you that it can become very difficult to make a recommendation on what someone should do in a stock or what somebody should do for earnings. I think it's possible. I'm going to listen very closely to what Jim may have to say, because I think that kind of wraps around more of his territory. And being that I've always respected Jim's options knowledge, so there may be some option trades that are available. So I'm going to let Jim come in here and then add my own. But Jim.
Yeah, well, as far as what I'm kind of looking at is obviously when you get the VIX way above 20 and you're into some type of things that you think are support, obviously the puts are very fat, and obviously the puts look very attractive from the sell side. But obviously the risk of it collapsing on you, like you saw back in 2015 and 2016 and saw in February, makes the put writer obviously in a very risky position. But if you do believe and you have some kind of a hedge on, like a credit spread or something, if you think this 25, 30, 52-week low is not going to get taken out, then obviously looking to credit put spreads and things like that would make more sense right now. You got to, what Wayne Gretzky always says, and I've stolen this line, you got to worry about where the puck's going or where it's going to be, not where it is right now.
Right.
And the puck is right here. So where's the puck going to be down the road? And here's the things that I'm seeing. And again, I'm not recommending anything, but I'll show you things. I'll be mentioning things that I'm looking at. So you can go look at them yourself.
Sure.
I'm looking at the midterm elections, right? And if they go into a red wave, I think that would be very positive for the stock market potentially. The second thing is buybacks, the blackout period. What does that mean? That means at the end of the quarter, 2 weeks prior to the end, you can't buy back your own stock, I understand. And then until after the earnings come out. But that period is now going to be behind us. So all that powder they got, it's a one-way trade, right? They buy back their own stock, right? So that's a powerful thing that could be coming up in November and December. The other thing is that G20 meeting. He's going to be possibly meeting with China. I think maybe the humility bug might actually bite Trump in the butt, and he may actually shake the guy's hand and make it look like there's something that could be happening, and that could take the tariff fear, moderate the tariff fear. And then the pension plans are going to get money coming in at the end of the year, and they're going to be looking at bonds or stocks, and they're going to say to themselves, where do we want to place the money? In a bond market that's declining, where the Fed's saying they're going to continue to hike? Or do we want to buy it into some of these discounted stocks? So there's a lot of things happening at the end of the year that could turn this train around, providing we hold above the 25-30 level. And some of this sectors that I've been thinking might be reasonable, the retailers, if we're going to have a good Christmas season, Ross, Target, and Walmart, they got a little bit of a bid today. Maybe that could be the start of some stabilization. The biotech sector, Amgen's looking like it might want to do something. And everyone has been pounding the drum on the financials and losing their shirts all year long. But maybe at some point the financials may have some value. We got that big takeover or buyout with IBM. Maybe there's more of that activity to follow. Goldman Sachs got discounted way down here to $208. See if it stabilizes down here, and see if these financials, which have not been a very good place to be really, maybe your leader there is JP Morgan. That's doing pretty good today. So there's a couple of things that I'm looking at going into the end of the year, and I don't want to get too negative into this 52-week low area of 25-30, 26-30 area with some of these other factors that could change the tune a little bit. Doesn't mean that we're going to go take out the highs and go into new highs, but it could mean that with the RSI where it is, with the VIX where it is, with the prices where they are, it's not the same environment as it was a month or two ago. So you don't want to have the same mindset, that you would have. And so that's some of the things I'm looking at.
Very well stated. Very good stuff. I always like it when we're on together, Jim, because I love your contributions. For me, I think it depends on what your time frame is for trading. As Damon said, I'm also a day trader now. I was a longer term. I carried positions in many, many different things. Right now, though, my primary focus is on day trading. And I think what that allows me as a trader is to come in fresh every day, to come in and not have to really worry about higher or lower, but worry about what's the market going to give me today. And I just want to ride along with and trade and make my money. Having said that, though, I think that I'm going to stand in total agreement with what Jim mentioned as far as a possible trade, and it's in the VIX. It's trading volatility. I think that if you're really feeling that the market is going to continue to rally and go higher, then as Jim stated, you go and you look at the big fat puts right now, because they are. There's a lot of premium in there, and as a premium seller, that's where you're going to want to go and look. But I like what Jim also added in that you don't necessarily just want to hang out there net short puts, because who knows really what will happen? Who knows for certain what the news will or won't be? So you don't want to get stuck there, but you could put on a credit spread, which gives you that protection that you're going to need and still allows you to make some money. So I like looking at credit spreads in the VIX. If you are a trader of Apple and you want to be somewhat prepared option wise for a move in Apple, because I imagine that as we get closer to their option, their date that they're going to report, volatility tends to kind of climb a little bit within the options, and that means premium. So if you can build an idea of where you think or what the possibilities are for that particular stock, downside and upside, there are enough strike prices within Apple that you're likely going to be able to put on a iron condor. And I wouldn't buy an iron condor. I'm only ever been a seller of iron condor because you want to take advantage of the premium. So an iron condor is just constructing that you're going to be short a call spread and short a put spread. But you kind of do your pricing. So you figure it's like your upside and your downside. That's how you're going to price where you're going to put your put spread and where you're going to put your call spread. I definitely would talk. If you don't know about an iron condor, please read up about it. Don't just run out and start doing these things without knowing all the upside and the downside on each one. But I like them. And it's a very short-term play. And you could do it in the weeklies. Apple has weekly options, and that going off right after they will expire shortly after, a day or two, the next day actually, from when they report their earnings. So you will know immediately whether it's a good trade or a bad trade, and then be able to take it off the following morning. I need to scroll to see because I think there was a question 5. I'm not sure. Question 5 is basically just any additional comments, suggestions, or questions or suggestions. Somebody said, I would like to know if any auto trades work. I hope you're listening, or I hope you're here on the show, because my answer to that is yes, they do. And the fact is that most of the larger firms right now, that's how they operate. They operate with algorithms, and algorithms are just auto traders. You push a button and it goes and does what you've told it to do. Things are like somebody says they only trade options, so it's less risk. The trade tactics are down, up, and sideways. I like that one. So obviously we've given that person some additional information this morning. And that's about it for people talking there. So again, what I'd like to do is do a round robin. If there's any last comments that you guys would like to make, or suggestions that you want to kind of toss in there at the end, just reintroduce yourself, where you're from, where you are, and how people can get a hold of you, and then any closing comments that you want to make. And Damon, we'll start with you.
All right. So you can contact me on top there for starters. I put my information up on top. If you're interested in any brokerage services, or the Photon Trader charts you saw, or the market profile charts, you can contact me or my other partners. And then meanwhile, I do want to say that this seemed to revolve a little bit around options, which is a good thing to do sometimes when you're looking at the long term. Like if you're not a day trader, I suggest options is a good way to go. So I will say that we also have options traders with our firm, and we have an options front end, and we offer our Future Path offers 6 different clearing firms and 20 different softwares. So we're not just showing Photon Trader to everybody. We're open to other softwares. As far as futures going, I do want to say this. If you were to think back in the days of 2009, maybe 2010 where volatility kind of shrunk. There's plenty of moves during the day, and there's plenty of money to be made day trading. So I like futures, and especially in these environments, everybody looks, all these markets, when they go sideways, it doesn't matter what front end you have because it's so quiet. But front end with these markets, you can catch some nice flips, and you can, the volatility is exciting, and and you can make most of your money just in an hour or two of the day. I like trading the last hour. Most people out there know that I like trading the imbalances in the last hour and volume, and that's why I have a lot of volume studies up there. And so with that being said, if anybody's interested, they can email me. And they can also email me. Next week, I'm going to be doing a webinar looking at the markets kind of live and going over some of the things that you saw, some of my strategies. And it will be interesting because next week will be the new month. So if you're interested, email me and we'll put you on the list. And if you're already a client or on the list, you'll get an email. With that being said, I will show you one of my analysts that help me out here. And I always refer to my technician here, technical assistant. So you guys go on, and thanks for having me on this show.
You're very welcome. And Jim.
Yeah, well, basically, we have a weekly market update podcast every week where we review the stock market, bond market, and gold and dollar. So there's quite a bit of information every week. And of course, on the option front, I've always been encouraging people to make sure they understand how the hedging works, meaning how does the married put work, where you have a put that's basically right against a position you own. So you have some kind of insurance against a drop, or if you feel like the upside is not that much, you do a collar strategy where you sell a call and use the premium to buy a put. And that can offset a tremendous amount of risk. And of course, there's a use and a risk of every strategy. But, when you get markets rolling over and people's equity going out the window like it is, they would have been well served to understand the use and the risk of the hedging tactics, because that could have made their life a lot more comfortable in the last month or so. So I'm very much a proponent of people learning and understanding how to use options as a hedge and also a replacement strategy. Some people panic out at the bottom because they can't take the heat. Sometimes it's not a bad idea to replace your long stock position with a call option, which has limited risk. And maybe if you go out long term, you could have a long-term limited risk option on a position so that you don't have so much actual dollar risk when you're holding on to a position. Lots to learn. At the podcast, we try to really get you up to speed. So I think it'd be really a good idea for you guys to check it out. Of course, it's free of charge. And the way you go is you simply go to option, professor.com, click on the button and put your information in, and then you'll get the link and you could check out what we're talking about every week. Okay. Thanks a lot for having me. And always, Michael, good to be with you, and David as well. Thanks a lot for having me.
Thank you. And once again, I'm Michael Filighera. I'm with logicalsignals.com. And you can always reach me through michael@logicalsignals.com or michael@mjf1partners.com. So that's mjf1partners.com. And right now, my focus again has been on day trading in futures. And I have joined together with a former member of my own trade room that we've always stayed in contact, and we've now traded together over 5 years. And I find her strategies to be this side of brilliant. And she uses Fibonacci, which is one of my favorite tools. And so we've combined kind of our talents and are using her in a trade room. And that trade room has been very successful. And again, we're helping people to pass a combine, and that is something that's offered for additional funding, and that's through Top Step Trader, which I know is now a partner with Timing Research, and that's really great. But it's a good way, and it's an easy way to kind of build up some equity in your own account by not using your own money. our other goal within our trade room is to help the smaller retail trader, the trader that's actually trying their dangest to try to go up against these larger algorithms that are present in the marketplace and often just really hammering people and knocking them out and blowing out their accounts. So we do a lot of strategies where you're trading a one lot and we're managing risk, and we're having a lot of success, particularly in the way that the markets are trading now, in order to help people to be consistently profitable. And so on that note, I would recommend that you check out there'll be an additional email that'll be sent out by David, and you just check out those special offers. And mine will be a special offer to give $50 off of 1 month of your first month within the trade room. So it's a pretty good deal. It's a very low price to come in and check us out for a month and see if that isn't something that'll help you become successful. And on that note, I'm going to turn it back over to David and say thank you very much to Jim Kenney and to Damon Pavlatos for being here today and contributing some good stuff.
Yeah, thanks, guys. Great show. I just want to remind everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. You can also go to TimingResearch.com, get access to any of the past reports or shows there. And be sure to join us for the 54th episode of Analyze Your Trade tomorrow at 4:30 p.m. Eastern Time. Dean Jenkins, Larry Gaines, and Mike Bassani will be on for that one. And just want to thank my guests again for this week. As we mentioned at the beginning, Roy Swanson of SteadyTrader.com was supposed to be here, but he had to miss this one, so we'll try to have him back soon. And I want to thank Jim Kenney of OptionProfessor.com, Damon Pavlatos of FuturePathTrading.com, and Michael Filighera of LogicalSignals.com. Thanks, everyone.
Thank you.
Thank you, Dave.